Good morning and afternoon, Joel Seach here, Principal Advisor, Harpel Financial Group. I hope wherever you are, if you're along the eastern seaboard of Australia, you're keeping healthy and well and coping okay, and most likely in a lockdown scenario. I was mainly just reaching out to firstly check in, see how you're travelling. I'm only a phone call away if you have any questions or any concerns or worries. But secondly, just to give a bit of an update and an overview on how we're tracking as an economy and how we're travelling from a market standpoint. I guess this week, we've just had recently the first Tuesday of every month in Australia, of course, is the RBA. RBA meets up to go through the interest rate. The current interest rate is maintained at 10 basis points at the moment, which is sort of what the market was expecting. And it looks like the RBA will probably reduce their fiscal stimulus or their bond purchasing arrangement they've got with the government from 5 million to 4 million and slowly taper that off towards the end of the year. The RBA was still, they noted the lockdowns in New South Wales and more recently in Queensland and Victoria and Adelaide. They've had an impact on the economy. However, they did sort of mention that previous lockdowns that have occurred, mainly in Victoria as a case example, the rebound did pick up relatively quickly after that lockdown finished. So they're hoping for the same situation. They're actually predicting the same situation in New South Wales will occur. So they're not too concerned about them tapering off the bond purchasing program that they're doing, which sort of helps inject money into the economy, and that's what they've been doing for a while now from an RBA standpoint. I guess in terms of an overall market position or an economy position, our government is still helping out with fiscal help to people or individuals and businesses that have been locked down or impacted by it. Looking back last year, from a financial year side of things, we saw a fairly topsy-turvy type year and then a very sharp recovery. We saw some divisive elections. We saw tension between Australia and China and Western economies, and inflation fears as well. So, what the RBA talks about was if there's a concern around a spike of inflation with some of the costs of goods really increasing dramatically, which they're not too concerned about. They feel like it's sort of a transitory blip in the radar, and then they feel like inflation may settle over time. I guess time will tell with how that occurs. In terms of all the growth and the rebound we've had, but despite all the various coronavirus lockdowns and setbacks, global growth has come back in a pretty V-shaped rebound. So it dropped off and then it came back fairly quickly. And it was on track for a decent 6% growth this year and maybe 4% next year. So Australian GDP's rebounded sharper than they first expected. The good news on the vaccine front, I guess, and the deployment in more developed countries has provided confidence in that recovery. Even though we have been a slow starter in Australia, we can actually see some of the other countries and how they've rebounded from that vaccine. And whenever the economy's looking like they're rebounding or things are working, the markets usually factor those things in well before that comes about. So I guess the central banks are feeling confident and they're shifting the focus to inflation and being sustained. Joe Biden's obviously come into power now, so he seems to be operating fairly well in America. And then the Australian fiscal stimulus is being, continued and helped out by the government here. So in terms of the outlook, where we're sort of looking, moving forward into this financial year, we can see, potentially shares should have some okay returns, helped by some of the economic growth and earnings growth and still low interest rates. Cash and interest rates and RBA rates, as mentioned before, they're going to stay low for this year and probably another couple of years. In terms of, property prices and growth, we're seeing, property prices really continue to drive forward as well. And, as shares have, property has also. So, predictions are that's going to continue on for this year also. And the Australian dollar is likely to trend up a little bit in line with the global recovery. And we've got strong commodity prices, which tends to help our dollar as well. I guess key things to probably keep an eye on coming up for this financial year is just COVID hospitalisations and deaths in countries that are more vaccinated. So if that starts to play a part, like the Delta strain having more infections and that causing more deaths, that's something to keep an eye on. Inflation, as we mentioned before, if there's a spike in inflation, that could hinder growth prospects in markets. Central banks and what they do with their interest rates, both here and abroad, and then just overall growth momentum and tensions with China as well. So hopefully that provides a bit of an overview on where we're at as an economy now in the market moving into the new financial year, and just a bit of a summation on that. But it's more important from a health standpoint and mental health standpoint. I just wanted to check in, make sure everyone's keeping well, and you feel free to reach out. Phone's always on and emails here if you ever need any questions or anyone to chat to. We're here to help, and we'll obviously catch up as we progress through the year. Thanks very much. Have a good day, and we will chat to everyone soon. Bye now.